A big down day on Tuesday. Joining us to visit about the commodity markets, John Heinberg with Total Farm Marketing. A big risk-off day on Tuesday. John, was there any news item that really triggered that? I know Russia, the ban from the European Union on oil looked like it maybe was a little bit of a culprit.
Yeah, there's a couple different things out in the news front that came out there. Obviously, that was the strength in the crude oil market on the overnight, was just that potential ban of those Russian supplies going into the European Union that caused crude oil to push to that $1.20 level. That may have been a little bit of a negative in some of the meats on the trade today. The other side of it, too, we're still really watching the headlines between what's going on with the Ukraine and Russia and allowing exports off. You did see some more talk that could happen. There is a meeting being set up for the 8th of June between the UN and Russia to do that. We'll see if something comes out of there. Again, they're going to want sanctions to be pulled off or softened in that regard, and I don't think that's something the West is willing to really do at this time frame. So it's still maybe a work in progress. And even with that being said, it's not going to be like they're loading ships immediately. But you got a market that's got a lot of speculative money in it, and it probably moved to the sidelines on that news sphere alone today. So but it really felt like just a big risk-off trade to end the month today, and it just spilled over from one market into the next across the board as we realistically saw weakness in almost every ag commodity or almost most of the commodity sector in general.
Yeah, I always say end of the month, you got to look out because anything can happen, right?
Very much so. And, when we start talking about the grain market especially, we're looking at seasonal windows here. We'll see the planting pace and things of that nature come out here this afternoon. But the expectation of the market is we saw some more progress, at least across the core states. Obviously, a big focus will be what's going on in the northern tier with North Dakota, northern Minnesota in that regard, as some of those planting dates are now here. And, again, moisture across some of that region over the weekend. So that'll be a big key, I think, going into tomorrow. We'll see how that kind of comes out. But it really felt like a risk-off trade. We got to about 9:30, 9:45 today, and you just saw pretty much all the markets just roll over. That's when beans really took their tumble off the highs today. Saw the cattle market come off its highs right in that same time window. It just looked like to me like some ag funds were moving some money to the sidelines to square up the balance sheets for the end of the month, and then we just go on from there, and we'll see how the market reacts on Wednesday's trade.
Soybeans in particular, we scored new contract highs early on, life of contract highs in fact, and then ended lower. Is that a reversal, a key reversal? Are you concerned about that?
Technically, that's probably one of the biggest moves I saw on the charts that make me nervous going into the rest of the trading session tomorrow and the rest of the week here. Usually you put those types of reversals in. Those are good indicators of highs that we got put in place. If you look at that soybean chart, especially in that front month July contract, this isn't a third time we've done that, pushed to a new high and reversed out, especially finishing as strongly lower as we did. So that's going to open the door technically for some additional money flow. The market was getting a little overbought right here in this window. Again, we're very range bound, and we were at the top of that range on Friday, pushed it out on the overnight session last night into the day, and now we reversed off it. So again, maybe we're just staying range bound, but the bottom side is still significant way, probably another 70 to 80 cents below here is where the bottom of this range is.
So did the corn market kind of hold some support that we needed to, though?
I like seeing a little bit more there. July corn did push to its lowest close since early in April, so that kind of opens up that door for some more selling pressure there. There we're going to still watch what happens on the demand side, and those things are kind of coming into play. December corn at least tried to hang into the most recent set of lows, so maybe we got a little bit of support there. We're trying to hold 750 on July corn, and that just didn't seem to want to be the mark that held today. So that just, to me, makes me a little nervous that we see some more technical selling, just given the strength of the sell-off and where we were. Did bounce a little bit off the close, but again, maybe some squaring up right there just after a very difficult day.
Well, and part of the concern also becomes when the Commitment of Traders report, it did show that the funds have exited a lot of their long positions in that corn market, right?
They have, and they've gotten back under 300,000 contracts, took off over 48,000 contracts off their length last week, and that's calculated on Tuesday, so that doesn't take into play the trade that we saw Wednesday, Thursday, and Friday as well. Seasonally, if you go look at the Commitment of Traders report on a chart, it's running the exact same pattern we did last year in this window, and the funds have ran this thing fairly strong. You think about all the way back through harvest, through planting, probably a spot they can pull some money off here. Take a little time, see how the crop comes together, and decide what position they want to have going into the rest of the summer and into the fall.
Does today's action confirm highs are in either corn or wheat futures? Because I know there was a lot of speculation about that already last week.
At least at this time frame, I would say the spring high is in here. Now it's going to come down to where the weather wants to go and what do we see. And obviously we got a lot of things coming in front of us from the acres and where we are in the planting pace. We'll have to watch some of those longer range forecasts. To me right now, to get to probably another set of highs, or at least to break back up to these highs, we're going to probably have to see some weather develop. Now we're after Memorial Day, so in this window, rains and lesser flooding rains are favorable for grain production, which is unfavorable for price. So again, we'll have to watch some of these forecasts. Long range forecasts are still talking hotter and drier as we get into late June, July, and August. That potential is out there, and that's probably what it's going to take for us to make sure we get to a new high. With the exception of obviously geopolitical events. Obviously we can't control what happens in those regards. Final number is, though, we're still tight on supplies across the globe regarding what grain we're talking about here, so it won't take much for money to want to flow back into this market to be a trigger to run prices back up to the upside again.
Speaking of money flow, cattle got caught up in that today in the risk off, despite the fact that we're still in those nearby contracts holding this big discount to the cash.
Yeah, that was a very disappointing day in the cattle market today. Again, maybe we're reflecting some possible lower cash trade. Talk was for steady trade. I heard some whispers of 135 out there today, and nothing really confirmed in that regard. That would be a couple bucks lower than last week, so that might have been some of the trigger there. We talk about money flow. It's very unique right now. The cattle market in terms of commitment traders down to about 16,000 long contracts. They typically do not go short on live cattle. They are actually sitting on a short position in feeders right now, which is kind of staggering. So maybe we're getting to the point here. Usually we put a seasonal low in this May, June, July, or this late May, June window, around this June options expiration, June contract time frame. So I'm hoping that's kind of the case there. At least as cattle markets could do that. Biggest factor we still got to worry about is the consumer. I thought that jump in crude oil prices, like I said earlier, was not favorable for cattle markets. That means gasoline prices are going to go up, and that's less consumer money, and that just spills right over into a negative selling tone in the meats overall, just because of the lack of consumer dollars.
You bet that really plays into that money flow. Did we hold support that we needed to today, or are we going to take that out in the cattle market, do you think?
June cattle fell through the bottom side. We've been holding that support here for multiple weeks, just kind of keep holding and testing us around that 130, 150 area. So we're through that today. That just opens us up probably for some more technical selling overall. The other side of the cattle market that's still concerning is we do have a lot of cattle in front of us here. Cattle on feed reports have shown that. We're going to stay heavy cattle probably in the June through August windows, maybe even into the early October time frame, till we maybe start seeing those cattle numbers tighten up. But right now we're still dealing with a lot of production. Actually, beef cattle production, even with the carcass weights being down last week, was still higher week over week last week. That's just something in terms of a market that's concerned about the consumer is only going to make it difficult for prices to rally.
Yeah, cattle look like they also got maybe pulled down by hogs, but we've had a couple of nice big up weeks in that hog market. And so how much of this was end of the month profit taking today, John?
It started a little bit on Friday. We kind of rolled off our highs on Friday, and then we put the gap lower in on today's trade. So to me, I think a lot of it was the premium over the cash index and the cash market. I mean, we saw that cash market really move up but kind of flatten out last week towards the end of the week. So, maybe the futures market got out over its skis a little bit here and needed to pull some money off the table. I do think that end of the month profit taking was part of that. We had a pretty good turn off those lows. We were getting real close to that 50% retracement level in that June contract. So it was probably a pretty good trigger point in here. Now we'll have to see how things go in terms of the retail market, the cash market this week. I know retails, at least at midday, were nicely higher today, maybe showing a little bit of demand here after the Memorial Day weekend as we start thinking about the July 4th buying window here for retail meats.
Appreciate your analysis. Thanks so much for joining us, John Heinberg with Total Farm Marketing.